The crypto market just took a brutal hit, and if you're feeling the heat, you are not alone. The total market capitalization has plummeted by nearly 4% in just 24 hours, now hovering around a shaky $354 trillion. But that's just the tip of the iceberg. In the past day alone, a staggering $1.1 billion worth of leveraged positions were wiped out, liquidated across the board. This wasn't just a gentle dip. This was a mass sell-off, a financial earthquake that has sent shockwaves through every corner of the digital asset world. So, what exactly triggered this sudden and violent downturn? And more importantly, how deep could this damage really go? Stick with me, because this is the kind of market-defining move that can rewrite the rules for investors, traders, and even long-term believers. We're going to break down what happened, why it matters, and what you need to be watching for right now to navigate these treacherous waters. This isn't just noise, it's a critical signal you can't afford to ignore. Let's really dive into the numbers to understand the scale of this event. When we say the entire crypto market value is down, we're talking about everything, from Bitcoin and Ethereum all the way down to the smallest altcoins and meme tokens. The total value is now sitting at approximately $354 trillion, which represents a loss of roughly 3.9%. While that percentage might not sound catastrophic on its own, in a multi-trillion-dollar market, that's hundreds of billions of dollars in value erased in the blink of an eye. But the truly dramatic figure here is the liquidations. Over $1.1 billion in leveraged crypto positions were forcibly closed by exchanges in just the last 24 hours. Let me explain what that means in simple terms. Traders who were betting on the market going up, using borrowed money or leverage to amplify their potential gains, were caught completely off guard. When the prices dropped sharply, their positions became unsustainable. The exchanges automatically sold their assets to cover the loans, creating a cascade of forced selling that pushed prices down even further. This isn't just people panic selling. This is the system itself forcing sales, creating a vicious downward spiral. Now you might be thinking, okay, some traders lost money, but why should I, a long-term holder or a casual observer, care about this? This is a crucial question. You should care because when the total market cap drops this sharply and liquidations spike this high at the same time, it's a massive red flag signaling two very important things about the health of the market. First, it signals that risk is increasing dramatically across the board. A sudden drop like this shatters investor confidence. People who were on the fence about buying in are now running for the hills. Trading volumes might thin out, making the market even more volatile and susceptible to large price swings. Panic begins to set in, and rational decision-making goes out the window. This isn't just about the traders who got liquidated, it's about the fear that ripples out to every single participant in the market. When fear is the dominant emotion, logic takes a back seat, and prices can become disconnected from fundamentals. Second, and just as important, this kind of event is what we call a weak hand flush-out. The traders who were over-leveraged, who took on too much risk without a proper strategy, are being wiped out of the market. While this is painful, it's also a natural, albeit brutal, part of market cycles. These liquidations remove speculative excess from the system. The cascading selling pressure they cause can often lead to prices overshooting to the downside, creating potential opportunities for patient investors who have been waiting on the sidelines with cash. So, while it signifies immediate danger, it can also signal that we are getting closer to a point of maximum pain, which often precedes a market bottom. So what was the spark that lit this fire? It's rarely just one single thing. More often, it's a perfect storm of several factors aligning at once. First, we likely saw some large players, the mega whales, deciding to exit their positions. When an entity holding tens of thousands of Bitcoin or Ethereum decides to sell, they don't just click a button. They do it in a way that can create immense pressure. And when other traders see these massive sell orders hitting the books, they follow suit, assuming the big money knows something they don't. It's a classic case of follow the leader, but in this case, the leader was heading for the exit. Next, we have the technical aspect. As prices began to fall, they breached key technical support levels, price points where buyers have historically stepped in. Many traders set automatic sell orders, known as stop losses, just below these levels. Once those triggers were hit, a flood of automatic selling began. This, combined with the margin calls for leveraged traders, acted like pouring gasoline on the fire. The initial drop triggered more selling, which triggered even more, creating that waterfall effect we saw on the charts. And finally, we can't ignore the bigger picture, the macroeconomic environment. Fear is not just confined to crypto right now. There are persistent worries about the global economy, uncertainty around future interest rate decisions by central banks, and the ever-present threat of stricter government regulations on digital assets. When investors feel uncertain about the broader economic outlook, they tend to sell off their riskiest assets first. And right now, crypto is still viewed by many as being at the high end of the risk spectrum. This confluence of whale selling, technical breakdowns, and macro fear created the perfect recipe for the correction we just witnessed. All right, so in this highly volatile and uncertain environment, what should you be doing? What should you be watching? It's time to be vigilant, not fearful. First, keep a very close eye on the total crypto market cap. That $3.5 trillion level is a key psychological and technical area. If we see the market cap fall decisively below it and stay there, it could signal that we are in for a much deeper correction. A break below that level could open the door to another 10–15% drop, so it's your first line of defense in gauging market health. Second, continue to watch the liquidation data. It might sound counterintuitive, but massive spikes in liquidations can sometimes be a bullish signal in disguise. They often occur near points of capitulation, where the last of the weak hands are forced out and panic is at its absolute peak. When you see a huge surge in liquidations and the price stops going down, it can be an early indicator that the selling pressure is exhausted and a temporary or even long-term bottom is being formed. It's a sign to start paying attention for potential entry points, not a sign to panic sell. Finally, and this is perhaps the most important advice, do not get tunnel vision on just one coin. It doesn't matter how much you believe in a specific project. A tanking market often drags everything down with it. The good, the bad, and the ugly. The saying, "a rising tide lifts all boats," works in reverse, too. Before you even consider buying the dip on your favorite altcoin, you must first assess the health of the entire market. Is Bitcoin stable? Has the total market cap found a floor? If the overall market is still in freefall, even the best project in the world is likely to get cheaper. Look at the big picture first, then zoom in. To wrap this up, what we just experienced wasn't just another market dip. It was a clear and loud warning sign that market conditions are shifting rapidly. The game is changing, and you need to be prepared. We've covered the what, the why, and the what to do, giving you a framework to think clearly when everyone else is panicking. If you found this breakdown helpful and want to stay ahead of these crucial market shifts, do me a huge favor and hit that like button. And make sure you subscribe and turn on notifications so you don't miss our next update. Now, I want to hear from you. Drop a comment below. Do you think we are looking at a bottom forming right now, or is the real panic just getting started? Let's discuss it. Thanks for watching and stay safe out there.